Hey, good evening, everybody. All right, so today we're gonna analyze the pound to dollar FX data, forex data. Yeah, pound is in news actually, right? It's historically the lowest in the last 40 years. The pound to dollar rate is at the lowest in the last 40 years or so. So it's a good moment to analyze this data. Okay, so I've got data for the last 50 years, starting 1971 until 2022. So that's about 51 years of data. I've also got data for euro to dollar rate, but euro is younger actually compared to pound, so we don't have data for 50 years, but we have data for last 30 years or 35 years, something like that. So yeah, we will take these two data sets and analyze. I've already got the data in my private folder. What is it? All right, so this is the pound to dollar data. It starts from 1971, and this value is about pound to dollar. Okay, so 1971 it was 2.39 times. That was so big, right? A number like more than twice. Pound was valued more than twice compared to dollar. But now in 2022, as we speak, in September 22, it is as low as 1.07. So imagine the kind of shift that has happened in the last 50 years. In fact, you go back to Second World War time, during 1945, pound was almost 4 times more valued than a dollar. It was that important currency back then. A lot of things have changed in the last 50 or 70 years, right? I think dollar has become a more stable currency compared to all other currencies in the world, including the pound and the euro. But pound is doing very badly in this particular month for a variety of reasons. I think the most important reason, beside the world economy is doing bad, etc., etc., the most important reason is about the fiscal policies of the UK government to combat the price rise or the inflation, high inflation, or the cost of living crisis that's now happening in the UK, where energy crisis or food items or a lot of the things, for example energy, for example gas and electricity, the prices are going up, and to support people the government has come up with a support package, and that will cost the exchequer, the government, a lot of money actually. And I think by some estimate it's going to be costing the government more than like 100 billion pound in the first year itself, and that support is going to be there for at least a couple of years time. So in anticipation of the fund crunch with the UK government, I think the value of the pound has tumbled in the last few days. Yeah, the extra money is going to also add to the debt. Already the debt to GDP ratio in the UK is quite high compared to the many other developed countries, but this is going to be even worse after this policy is implemented. Okay, so what has happened? Maybe we can go through the news item actually. A lot of the good news items were published yesterday. One good thing is about so what happened actually, maybe in brief, as you know that the world is going through troubled times, especially with regards to the inflation rate. In UK it is among the highest in the developed countries. touching 10%. Prices are quite high, especially on the energy level, and a lot of the people are struggling to pay the bills, the electric bills and the gas bill. In order to support them, the government is giving them a support package. Government is subsidizing that, and that's a lot of money actually. And that's for everybody actually, not just for certain income level, people from certain income level, but for everybody. And that's going to cost the government a lot of money actually, and the government will borrow money, and this is more of a fiscal stimulus, right? This is not a monetary policy as such, but this is more of a fiscal stimulus. That means the government is doing that, not the central bank, not the Bank of England, which is the central bank in the UK. It is the UK government that has taken this step. And when this was announced by the UK finance minister, the pound crashed. It was already quite low actually, right? It was already quite low already, like, this year it has already crashed. It has, the pound to dollar rate has gone down by about 20% already. And because of this announcement, this crashed even went further to 25% or something like that. And this is the tweet by the Bank of England also yesterday, which was that it's not just the fiscal stimulus that's going to impact the economy, UK economy. It's also going to be the interest rate hike that the Bank of England is most likely to. That it has already tweeted, right? For instance, here you see the tweet from the Bank of England Twitter handle. The MPC will not hesitate. MPC is the Monetary Policy Committee in Bank of England. Will not hesitate to change interest rates by as much as needed to return inflation to the 2% target sustainably in the medium term. So the message is very clear. So the central bank in the UK will go to any extent to bring down the inflation, bring it down to the target level, which is 2% in medium term. So that may be a couple of years maybe. I think we have seen that also in the US. The target of 2% is likely to be achieved in 2024. So that's like in 2 years' time. So so this coming 2 years will be tough for the UK economy, both from the fiscal side, as you see. Stimulus is going to have give a trouble time to the UK economy. So is this interest rate hike, which is going to also be a double whammy for the UK economy, right? Some interesting news items I was going through. I think he's the finance minister, Kwasi Kwarteng. He reassures the people, the bankers in London about the UK economy, and maybe we could read a bit. The UK Chancellor has told leading banker insurer asset managers that he's confident this economic strategy will work, as he tried to reassure the City of London after days of turmoil in the financial market. The meeting between Kwarteng and the heads of companies including Aviva, Legal & General, Royal London, BlackRock, Fidelity, JPMC came the day after sterling is pound hit a record low against the US dollar in response to the Chancellor's mini budget. So that's a mini budget. That means the fiscal stimulus, package to the public, so that they're calling it as a mini budget. Yeah, but I think I was listening to a lot of these experts, and I think a lot of them agree that this will damage the economy a lot. So it's not going to be, so the economy is not going to return to its normalcy anytime soon. At least it's going to have some tough times in the coming quarters for sure. Okay, we will do some sort of exploratory data analysis on the pound to dollar. This is the Python code, and I think we've shown you the data. I've got the pound to dollar data, but I also got a euro data. which is, yeah, so euro to dollar. And I think I don't have 50 years of euro to dollar data. No, it starts in 1990. But when did the euro start? Euro. When was it introduced? 92, but I think effective later on, right? It was the single currency was, there was the discussion in the Maastricht Treaty among the euro economies, but I think it wasn't yet used until 1995 or 1999, I think. The currency was introduced as a non-physical form, electronic transfer banking, as the midnight of 1st of January 1999. Okay, so that's good. So we have 23 years of data. It starts with, from 1999, and I think April 1999, the data that I have. Okay, so that's not bad at all, because 23 years of data is also quite okay. All right, so we have got euro as well as, so euro was about 1.18 times that of the dollar when it was introduced in 1999. I think, so far I know, I think most of the times it has remained quite stable. It has increased to 1.4, 1.40 or 1.45, and now it is below 1, by the way. But the fluctuation of the pound is much higher compared to euro. Now it is 0.99. I think today it is 0.96 or something. It's fluctuating a lot. Euro is fluctuating a lot in the recent weeks, but it has come down to even like equal to euro or even less than euro at the moment. Okay. All right. So I will import the libraries, working directory, and I'll import these two Excel sheet. Using pandas. Okay, so this is our data frame pound to dollar. That's where we have the time series data for pound to dollar value for 50 years and euro to dollar data for about 23 years from 1999. Okay, so this is how the data looks like. So let's plot it, right, for the entire period in the history, entire period, or whatever number of years the data is available with us. So we'll start with plotting the pound to dollar, and then we'll plot the pound and the euro to dollar. Okay, so we'll use the matplotlib library to plot it, and this is how it looks like. It was about 2.6, so pound was 2.6 times that of the dollar in the 70s, I guess. Okay, let me drag down. In the 70s it was 2.6 times. In mid 70s it dropped to about 1.6, where in 1980s it went up to 2.4. So it fluctuated quite a lot in the 70s and 80s. I think sometime in mid 80s the pound came down to 1.1, 1.2, that level, and then it again increased in the 90s to 1.8. So there's a lot of fluctuation, as you see. I think even close, around 2010, pound was like twice as more valued than the dollar. And then in 2015 2015, the pound dropped quite a lot, right? The steep decrease. You know what? Because of what? Because of the Brexit. So Brexit happened in 2015 or 16, I think 2015, and then pound crashed. It took a long time for it to regain, the status of about, pound being 1.2, 1.3 or 1.4. But in the last few weeks, I think starting this year, it has gone down to, let's say, 1.2, and then it has now gone down to 1.06. And some people, some very great economists, they're predicting that in the future it could well be like exactly the same, like £1 is equivalent to €1. That could also happen. So that's pound. We have also plotted euro. Okay, same script. You can also plot it differently, in the sense, in order to have a better graph, maybe just plot it by combining these values, right? This is more of a daily data, so we have just too many data points, so it's a bit, but this is not 50 years, this is 22 years or 23 years. It starts in 1999. Yeah, because the scales are different, it looks like the euro is actually more fluctuating, but actually that's not the case. The pound is actually, the scales are a bit different. Remember, in the y-axis, the range is like 1 to 2.6, whereas in the case of euro to dollar, it is between 0.8 to 1.6. So euro was at some point was like 0.8 times of dollar, I think, in the 2000, in that period. I think that was a time a lot of the European countries, the poor European countries, not the Western European rich countries like Netherlands or Germany, France, they were struggling, but some of these poor European countries are really struggling in the euro area. For example, Greece. Greece was struggling big time. I think right after Athens Olympics, if I remember correctly. So that was like a couple of years when Europe was doing very badly in those years. Yeah, so euro was doing, it was like 0.8 times, 0.7 times of the pound, of the dollar for, I think, a couple of years, about 3 to 4 years. And then it bounced back. It went up to 1.6 sometime in 2008 or 2009. But ever since, it is going down again, and now it is leveling at that point where euro and dollar have similar values, or sometimes even euro is having less value. Good stuff. Then I have also plotted this pound to dollar for the rolling average, just to smooth a bit. It doesn't make much of a difference here, simply because we already see the clear pattern in the data, so there's nothing more to get out of a smooth graph. But this is also sometimes useful if you smoothen it a bit. Okay, so this is what I'm doing. This is for the pound, where you see for majority of the days. So in y-axis you have number of days, okay, and in x-axis you have the exchange rate, okay, in times. Majority of the times it has remained around 1.6. Majority, you see, right? 1.6 is the thing. What about euro? I'm interested. Euro to dollar. Yeah, so euro to dollar, it has majority of the times it has fluctuated between 1.1 to 1.4, right? This particular area. So 1.1 to 1.4, but sometimes also there are some outliers, for example 1.5, 1.6 or 0.8, 0.9. We plot the kernel density of the pound to dollar, and here you see It's hovering around 1.6. Yep. Yeah, it is about 1.6. And yeah, corner density percent is smooth version of the, it's very similar to histogram actually, so not very different. Then we do a blocks plot. Yeah, same thing. The 50th percentile is about 2.4. What about euro? Yeah, okay. All right. What is interesting is that even though pound has lost its importance as a global currency in the last 50-70 years, it's still doing better than the euro actually. Right, so that's also another interesting fact. In many ways, I would say, even after Brexit, for the first few years, pound was doing quite badly. But I think when Britain exited from euro in 2019 or 2020, I think pound started doing better. Okay, there's very good. I was watching this this video of this YouTuber. What's his name? This gentleman, Patrick Boyle. He has made a very wonderful video about why pound is tumbling. I was watching this. If you really want to
fiscal stance.
Maybe we can watch.
Iedereen wil een lagere energierekening. En dat begint met isoleren. Kitten, toch strips. The new British Prime Minister of living crisis, which was a problem before the war in Ukraine and has only gotten worse since, in particular due to the huge spike in energy prices. The new British Prime Minister, Liz Truss, who assumed office a few weeks ago, has promised to be bold and to do things differently. Upon her appointment, she put in place an energy price guarantee to limit the amount that suppliers can charge customers for gas and electricity. The plan is that the average British family will save £1,000 a year based on current energy prices. £1,000 converts into a bit over $1,000. The price guarantee is to be funded through borrowing, and according to the Institute for Fiscal Studies, the 2-year energy package is likely to cost £100 billion, or 4% of GDP, in the first year alone. Its total cost might be £150 billion, or dollars or tethers. The Bank of England's chief economist said at the time that the extra government borrowing and spending would likely lead to higher interest rates in the future. Investors sold UK assets earlier this month after this announcement, sending the pound down against the dollar, which reached its weakest level since 1985. Something did have to be done about high UK energy prices, in particular because energy prices make up a very high percentage of the costs of the most vulnerable in society. So there's a good argument that any support should have been targeted to reach those who are suffering the most through energy inflation. Possibly offering means-tested support would have made the overall package a lot cheaper, and the economy would have been better able to sustain such a package should the current high prices drag on longer than is expected. Manoj Pradhan and Charles Goodhart at Talking Heads Macro estimate that this support package benefits the wealthy in the UK 2 to 3 times as much as it benefits the poor. So maybe it's not as well designed as it could have been. On top of this, high prices send an important economic signal to consumers, encouraging them to cut back on consumption when prices are high. A broad-based price freeze like this mutes that signal, meaning that those who can still afford the high energy prices are less likely to cut back on consumption than they might otherwise be. So the pound began declining again on Friday and over the weekend, reaching its lowest level ever against the US dollar today. This decline came after the announcement of Kwasi Kwarteng's £45 billion tax cut package on Friday. The tax cuts were put in place with the goal of boosting economic growth. The slide in the value of the pound prompted numerous jokes comparing the pound to an emerging market currency. We'll talk in just a moment about why the idea of a looming EM-style sterling crisis doesn't make an awful lot of sense at present. A declining pound, I should first note, is not a new thing. The pound has been falling against the US dollar ever since the end of the Second World War, when the pound was worth around $4. The reason for this consistent depreciation is just that the UK inflation rate has been persistently higher than US inflation over that period, and the exchange rate had to fall in order to equalize price levels in the two economies. The recent fall in the pound is driven by investors selling British assets because they have doubts about the soundness of the government's plans.
Als jonge en startende ondernemer voelt het heel erg alsof RVO een van de vele bureautjes is.
Sterling and the UK government bond market have been in meltdown as a result of the government's mini budget. So in this video we look at the reasons behind that market reaction, but also consider what might happen in future for the UK economy and markets. So let's look at the UK economic crisis, what happens next, in a bit more detail. Let's start off by looking at some key points from the mini budget. You can read this for yourself in a 40-page document, which is beside me here, the Growth Plan 2022. Now, one thing that the government didn't have a choice about is the energy price guarantee. They simply had to do something about that. Otherwise, UK energy prices would have simply gone vertical over the course of this winter. Now, the energy price guarantee that they came up with should reduce inflation over the short term. However, the way they've chosen to fund it is looking very risky. Effectively, what they have is unlimited downside if energy prices spike over the course of winter. And unfortunately, this has coincided with huge tax cuts, the largest we've had for many years. Now, this has created a huge load on the UK bond market, because if you issue lots of new government bonds, then that tends to push down their prices. Lots of supply without a huge increase in demand does that. Also, the government's tax cuts will exacerbate income inequality, but also regional inequality in income across the UK. However, the growth plan is not all negative. Certainly one of the big positives is that it acknowledges that we have a problem with growth and productivity growth in the UK. Another positive is greater spending on infrastructure, so improving the road and rail network, as well as energy production and decarbonisation, and the digital infrastructure for Britain. Now, one of the things that's rattled the bond market in particular, but also the currency market, is that the UK is running a double deficit. Now, this is something which is often a red flag for an emerging market economy. The first half of that twin deficit is a current account deficit, which roughly means that the amount of exports is less than the amount of imports. So the net position is that capital's flowing out of the country. At the same time, you've got a fiscal deficit, which means the government is spending more than it earns in taxes, and the difference has to be plugged by issuance of more government debt. Now, what you'd expect to see for an emerging market twin deficit is that there'd be a currency devaluation, and that's exactly what we've seen in the UK. But another way of characterising a twin deficit is to say that you're borrowing from foreigners to buy foreign-made goods. Or as Mark Carney put it very succinctly, he was the previous Bank of England governor, the UK is now relying on the kindness of strangers. Now, strangers are probably willing to buy UK government debt and to carry on being kind, as long as the government's seen as being responsible in its debt issuance. However, having tax cuts at the same time as massively increasing spending is seen as irresponsible. So that's part of the worries, I think, behind what's made gilt yields spike upwards. And the current account deficit is very large, as you can see in this tweet from Robin Brooks. Currently it's running at 8.3% of UK GDP. A large amount of that comes from the fact we've had to import energy at vastly elevated prices, because we're paying for it in a weakened sterling and it's priced in dollars. So as the value of sterling devalues further, that problem's going to get worse, and the current account deficit will get larger.
It has been about the dollar. Some big currency moves are following today, and the main action is taking place right there, with dollar strength causing turmoil for global FX. We're going to start with the British pound here, an already falling pound touching its weakest level against the US dollar. We're talking about the weakest on record on the back of a badly received mini budget. And, you know, really, Inez, this is one of those stories I think a lot of people are sort of last week started following through when the announcement came through from this new UK government that they would in fact be implementing permanent tax cuts. We're talking about sort of Reagan-style trickle down, and that was not received really well. We saw the big swings. Now we're talking about at least one analyst, and we're going to have that guest on later today, calling for parity in terms of the sterling against the dollar. We're also seeing the euro hit the lowest against the dollar since 2004. So, you know, we don't often talk about FX so much, but this is really where all investors are watching right now. And it's worth pointing out, a note out from Morgan Stanley today saying this is an untenable situation for risk assets, including stocks. Michael Wilson, the analyst, saying he sees an eventual low for S&P 500 later this year from 3,000 to 3,400. And here's an interesting stat I think will help a lot of people understand why it's so important to be watching these currency moves. The dollar index up, roughly 20% this year. Every 1% change in the dollar index has a negative 0.5% impact on profits. This is according to Morgan Stanley. So Q4 they see in terms of earnings facing 10% headwinds from that. So while we're talking about a big story, a policy story over in the UK that's affecting the pound, this is something that will be trickling down all the way over here.
Yeah, completely. Look, this whole story has been about the U.S. dollar and the strength of the U.S. dollar and creating havoc really in abroad. You mentioned the British pound. It has pared some of its losses, but we saw that 2-year gilt over in the UK. We can show the chart there. That surging on the British pound as it went to its lowest level against the U.S. dollar. Of course, there's been speculation that the Bank of England will respond to the market moves, but you have to wonder, as you were just mentioning tax cuts when there is so much inflation and increased spending when there's so much inflation. So it's not surprising that we are seeing some of the moves that we've seen with the markets.
Pound is not doing well because the UK economy is not doing well, and with this tax cut thing, that in the mini budget of the UK government, the tax cut, well, in some form it's a tax cut. It's basically subsidizing the energy consumption of the people. It's going to cost the government about £100 billion, and that will create some sort of a fiscal deficit in the government, because of which the pound is going down.
Je haalt je uitjes toch niet bij de ene kraan en je haring bij de andere? Precies, maar thuis doe je eigenlijk hetzelfde met je energie, internet en sim-only. Combineer alles gewoon bij één partij. Weet je, thuis, alles onder één dak.
We got some breaking news to get to out of the markets now, with the Dow officially closing in a bear market. It is happening, down more than 300 points since last week, with the S&P and the Nasdaq both falling today also. It's happening at the same time as another key economic indicator, the British pound, hitting an all-time low today against the dollar. £1 equaling about $1.03. It's now back up to like $1.07. If you've ever wanted to visit the UK, now is not a terrible time considering the exchange rate. And if you're thinking, hey, a strong dollar, cool, I can get behind a strong dollar. Well, economists aren't so sure. One headline in the New York Times framing this as being good for the U.S. but bad for the rest of the world. And experts point out that in the past, dollar strength like what we're seeing now has led sometimes to some kind of financial or economic crisis. I want to bring in now our NBC business and tech correspondent, Brian Chung. So, Brian, the Dow now officially in a bear market. We had talked last week, it was maybe flirting with the bear market. They have now sealed the deal. Does that actually mean anything functionally for human beings who are not day-to-day stock traders?
Well, functionally it means don't look at your 401k for right now, but when you take a look at the bear market that we entered officially today as of the market close, that is because the Dow fell by over 1% today. Essentially what that means is that from the peak of the Dow earlier this year, it's been a 20% fall. The S&P 500 had already reached that watermark in July. Now, what we're talking about here is a stock market that's obviously been ugly in 2022. All this built around the fears that we're seeing from a Federal Reserve that could be raising interest rates into a recession, the cost of lowering high inflation in this country, compounding all of that with the developments we've seen overseas, as you mentioned, with the British pound falling as much as 4.4% today. That might be good for American travelers, but not good for the international picture, because a strong dollar has, in some cases in the past, led to financial crises in other countries.